to get you the levels that we need to watch out for. We're getting Aditya Arora, who's the founder and multi-asset research analyst at Leatech. Hi, Aditya. Thank you so much for joining us today. Aditya, this is the fourth day of decline coming in for the Nifty. In fact, we've broken below the 23,500 levels. Have we reversed to the downside? What are the levels, major levels to watch out for on the benchmarks?
Very good noon to you and to everyone. Look, I think markets are declining, and along with that, we are also seeing consistent FI selling. Hardly 1 or 2 days of buying from FI, and most of the times they are just selling in cash market. So that is bound to create supply in the market, and that's why we are seeing the big pressure coming in Nifty small cap index and Nifty mid cap index. So that is clear cut, like a sell and rise trend, very prominent over there. So a lot of opportunities on the bearish side in Nifty mid cap and small cap space. And if you also watch a lot of new stocks which got listed, they are consistently making new highs. So the space which is in flavor is getting hit the most and on consistent basis. So it's a time to be little cautious on mid cap and small cap space. But I still feel that large caps is the space where there's a lot of safety, consistency, and stability, because most of these stocks have made an attempt to break out, but then again they are retracing a bit back. So I think large caps look good, small cap, mid cap look weak, relatively weak. And if we talk about the index level, then I think we can again test the lower levels as we have broken important support of 23,500. Until we are trading below 23,600, one should assume the trend to be neutral to bearish. On the downside, the levels which we could achieve are 23,100 to 22,700. So little bearish trend on the index front, but I think FMCG sector looks good, and large cap space could relatively do well.
FMCG looking good to you, Aditya. You're also saying that the large cap space looks well, while you are cautious on the entire SMIDS basket. So, if you have to recommend some stocks for our viewers, what are your picks going to be, and do they lie in that large cap or rather the FMCG space?
Sure, they are from that space itself. And my first stock is Britannia. I think FMCG basket has given a big correction in last 3 to 6 months, and it was the first sector to correct. Now it's the first sector to make a base, and is also making an attempt to inch higher. So compared to volatility of market, this stock could relatively do well. So this is a buy at 4960. 4800 is the stop loss, and target is 5120 to 5200. This is the first pick from FMCG, and the second pick is also from FMCG basket, which is the space which is showing the highest relative strength. So second one is Hindustan Unilever. That's a buy at 2376. 2300 is the stop loss, and target is 2460.
And since you're talking about the FMCG space, Aditya, I have a counter question for you. Britannia, very good set of numbers, 6% volume growth. That's something that the street also wasn't expecting. On the flip side, HUL was rather muted when it comes to their volume growth. Going ahead, how much do you think these stocks could do well? Because Britannia has already run up post its earnings, and does it still seem that attractive to you?
Absolutely, it seems pretty good, relatively good, because hardly any gains seen in last 1 or 2 months. Previous day the stock was down. Today we are up 2%. The stock is up 2%. So not much action so far, but there's scope to achieve higher levels like 5200 to 5500. And I remain optimistic because a lot of bad news is already in the price, and FMCG companies aren't so much influenced by the bad numbers because they're already in the price. But any good news, any improvement on this any front could be taken very positively by the street. And technically also, now after forming a base formation, a rounding base formation, this stock seems to be like a positive candidate, and there are signs of accumulation on the chart. So overall, good texture in complete FMCG basket space.
All right, Aditya, thank you so much for your views coming in there. Thank you so much for joining us. We will let you go on that note. But moving on, the government